please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Us on Business Lunch. I'm Nisha Podar, and with me, as always, Sonia Shenoy. Sonia, good afternoon. What an eventful day of trade today, and it's a congregation, clearly, of many aspects which are really spooking the market. To begin with, the NBFC space, led by IL&FS concerns, and on top of that, the rupee, as well as crude, the double whammy there, which could really have a huge bearing on our fisc, is not giving any comfort. In fact, that pressure point really remains, and on top of that, there are various other factors like redemption pressures also kicking in, Sonia. So not looking at the point good, but off the low point of the day. So Nifty 50 getting some support at below 11,000 mark.
Well, absolutely. It's a complete massacre across the board if you're looking at it. You know, only TCS and Infosys are is the saving grace for the market. There's about a 40-point positive contribution from TCS and Infosys. If that was not the case, then this market would have been much lower. So yes, IT is supporting the market, but really, X of that, it's bloodshed across the board. Even if you look at the advanced decline ratio, almost 2,000 stocks now on the declining side. Anuj is also here with us. Anuj, you were making this point in the morning as to how, you know, if you thought Friday was freaky, just wait for Monday. A lot of that is really playing out right now. But at what point... I know maybe it may be too soon to start calling it oversold, etc. But at what point do you think this mayhem could stop?
You know, it will have to be some kind of scare for the bear. You know, some kind of large intervention. You know, some kind of large buying. You know, we've had some statements, of course, from the finance ministry. They are obviously not helping for now. You need something bigger. Some monetary intervention is what perhaps this market needs right now, Sonia, because this market's broken down. Yes, there's a bit of a mild recovery, but we saw a mild recovery on Friday as well, and we know how that shaped out. So today also there's a good risk that this recovery gets sold into. The key to watch would be now the intraday low, because the intraday low today is now same as Friday's low. So you know, somewhere around 10,958, 960 thereabout, I think is the level that you will be watching out for. The financials have clearly broken down. You know, you don't see stocks like HDFC fall 5.5% intraday after already having corrected about 10 to 15%. And remember, we've been making this point, the way some of the large stocks have sold off over the last few days, backed by delivery. This market's been sensing this kind of problem for some time now. And my only worry is that, you know, with this kind of decline, especially in the broader market, it once again leads to quite a bit of hit in portfolios. So, and today's fall is also, you know, the Indian market started to underperform a lot with today's fall and with Friday's fall. If you look at the MSCI emerging market, MSCI Asia ex Japan, I think we've easily been the worst performing market this month. Not looking good. Look at stocks like Edelweiss, for example. It was just last month or just before that, you know, it had made an all-time high at 350, 334, 335. Today it's made a fresh 52-week low, Edelweiss. And you know, that just tells you the kind of problem that this market has. You're taking money from the space where you have made the most money. Bajaj Finance, of course, is the other example. Sometimes, you know, these panic times are good opportunities to buy, but then who's to say at what point does the market, you know, bottom out?
But you know, that's the thing, right, Anuj? I mean, of course, these 2 days, the fall has been quite ferocious. But if you take 2 steps back and you look at the fall overall in the market, it's been not even a 10% fall, right? Yeah. So is this still a bull market correction? Oh,
yes, this is, you know, you remember, Sonia, last bull market, we had so many instances of market correcting at least 10-20%. Yeah. This is what, 6%.
6%,
so,
yeah.
And, you know, look, I mean, the point here is, if you bought Bajaj Finance at 3,000, and you were sitting at 2,300, you lost quite a bit. Yeah. But if you had invested 4 years back, you're not worried at all. You know, in fact, you're looking at what point you want to add more. So it's all about, you know, the context. The context is that we had a massive one-way rally in July, August. Now you've given up 66% of that. Let's see if you have to give up all of that rally. But near term is looking weak. That no one should have any doubt about.
All right, 2 key takeaways. Near term still looking weak, and on the other hand, it's a bull market correction. Thanks, Anuj, for joining us with all that perspective. Let's take it straight to the dealing room check as well. And what's really taking place right there? Nimesh Shah is joining us with all the update. Panic selling, Nimesh?
Yes, Nisha. In fact, it's largely in the housing finance companies and NBFCs. That's where the first round of panic was clearly visible, and now it looks like it's spreading over to the other sectors as well. So mid cap and small caps are under pressure. I heard about margin calls getting triggered at 11 a.m. in the morning. So that first pain of margin pressure is clearly out of the way, but still the mid-cap and small caps are down. You know, one of the factor in today's trade is there is lack of support coming in from the larger FIs. Given that many of the Asian markets are shut, the volumes are on the lower side from an FI perspective. So that's not really which is helping the market or supporting the market at lower levels. Yes, there is some bit of buying coming in from DIs, but again, that's more on the defensive side. So the IT and pharma is where some bit of DI buying is coming in. But the other pocket of the market, essentially the NBFCs, banks, financials, that's where there is now clear panic selling, and that's clearly visible in the mid cap and small cap as well. From a technical point of view, 11,000 on Nifty is an important level to watch out for. Psychologically, if that gets broken out, you will see further selling in the mid cap and small cap and in the larger names as well. So clearly there is panic now from the retail and HNI category. The only positive, so to speak, in today's trade is lack of FI support, which is like in terms of volume. So if that has to be there, then probably we'll see some bit of pullback. But largely it looks like technically we're in a weak zone. And if 11,000 on the Nifty is broken, then we'll see further selling coming in, both in the large caps as well as in the mid cap and small cap.
Okay, thanks a lot, Nimesh, for that. And it is the NBFC space actually which is seeing immense selling pressure second day in a row as a fallout of the IL&FS mess. The Reserve Bank and SEBI have issued a statement saying that they are ready to act as and when required. That has not helped allay any kind of fears, but the RBI has called upon IL&FS shareholders for a meeting on the 28th of September. We did speak to the SBI chairman and a whole host of debt fund managers on what they have made of this panic that was created in the market. Hear out what they have to say.
We keep on watching the developments, but as of now, the NBFCs with which bank has relationship, and if there is any requirement or if they approach, then whatever we do in the normal course of our credit due diligence, and based on that, there is no problem. In fact, in yesterday's release, I have also mentioned about SBI's willingness to partner with NBFCs for co-lending model. This we have been planning for about a year now. And the concerns on NBFC because of IL&FS, I think there is a extreme reaction which is totally unwarranted.
Right now, mutual funds have enough liquidity. And on Friday, we have paid redemptions. Today also, all redemptions are going through. But it is extremely important that we take precautionary measures. Due to advance tax outflow, system has got deficiency of about 1,30,000 crore. And there is also reports about Campa funds which are lying today with banks, which will have to be transferred to government, both central and state.
We have not just not defaulted, but there is not even a single day's delay, and this has been a long-standing unblemished history for the past 34 years. In fact, on the day of the mayhem as well, just to put on record, it was business as usual for us. We made a payment of almost 700 odd crores, for CP as well as some of the other bank obligations. And as we speak today, there is a 900 crore payment going today as well, to the CP holders.
No, there is no great recovery for the market at the moment. The Sensex is still down almost 400 points. It's just that the selling pressure has not accelerated. And for now, we are just seeing, a status quo down about 400 points on the Sensex. But Tata Steel has announced the acquisition of Usha Martin steel facility in Jamshedpur for 4,600 crores. This will be their second acquisition in the debt-laden segment. Nisha caught up with the management on the deal and the deleveraging plans for the company. Listen in.
It is on our table just now simply because it's going through the courts at this point in time. We will go through the process. We will cross the bridge when we reach there. But as of now, we are part of the process and we will wait to see what the outcomes are of the courts.
All right. So, Mr. Chatterjee, of course, as far as balance sheet is concerned, and Mr. Narendran spoke about that, over 1 lakh crore rupees of debt already on your books, and this particular acquisition of Usha Martin steel business is going to increase it further. Of course, 2.6 billion or 20,000 odd crore rupees will go as and when this improved JV will materialize. But what is your deleveraging plan from here on?
So I think, as Naren mentioned, we will look at each of these growth opportunities in its own merit and in the holistic manner as to where it takes us from profitability, value creation, and the balance sheet structure is concerned. So with the completion of the JV in Europe, we would be reducing debt by about 20,000 crores or thereabouts. That will be first step. Second is if you look at the current level of earnings and cash flow generation, we have our definitive plans of gradually reducing our leverage while we are still going to grow organically in Kalinganagar. So we are looking at positioning ourselves on a net cash flow level after the growth, and I think the next 3 years we would be happy to maintain our balance sheet post the deconsolidation of the JV, use the cash flows mostly for the organic growth and for the surplus cash flows then to be deleveraged. And we're looking at parts of the portfolio also, which is also a part of an ongoing exercise. So I think the question is, if you continue to grow in productive assets, if you continue to grow in assets which gives you EBITDA and cash flow from day one, and have the ability to bring in synergies which may be proximate synergies, maybe structural synergies, our ability to leverage cash flows is most important. And that's the whole focus that we have today. So every ton of steel of new capacity has to be cash flow accretive, and that's our whole focus. As far as Usha Martin is concerned, when the transaction completes, I don't think that it's going to be a leverage transaction, because even in Bhushan, our marginal debt equity has been 50-50. We put in almost 18,000 crores of equity in that company, which is not levered equity, pure equity. And we had about 17,000 crores, and we are seeing as part of the phase 1 of the integration, and based on the markets currently, that our cash flow generations are healthy on that. So similarly in Usha Martin, we will structure it in a manner that it doesn't cause stress either to that individual business or to the overall balance sheet.
All right, so that was the management of Tata Steel. Now remember, this is one of the first few asset sales which is to wipe off debt, and many more will actually come out outside of NCLT, remember. So this trend is picking up. In fact, I spoke to the sellers as well, Usha Martin, which will really take the opportunity to sell steel asset to pay off debt and strengthen its core wire rope business, keeping their raw material availability intact with a long-term agreement with Tata Steel.
We used to sell our steel at market price from the steel business to the rope business. Right. And with the arrangement with Tata Steel, what we have a 5-year supply agreement on market price.
All right, the other big story in focus is Yes Bank and what has happened over the last 48 hours to a couple of days. Yes Bank, in fact, will be holding its board meeting on the 25th of September. That's tomorrow. Ritu Singh joins in to give us what's likely on the agenda this time around. Ritu, over to you.
Well, Sonia, two key things will dominate tomorrow's board meeting at Yes Bank. One, of course, is finding a successor for Rana Kapoor when he retires as of 31st of January 2019. So we understand an internal selection process. A committee will be set up that will look for a CEO, and it is likely that an internal candidate will be picked. Rajat Monga, that is seen as one of the strongest contenders. He was the CFO, is now also a senior president on the bank's board. The other strong contenders in the fray could be Pralay Mondal as well as Padmanabhan Kumar, who also currently hold strong positions in the bank. But more importantly, the question that the board has to deliberate on is the future of Rana Kapoor himself. Now, by virtue of being the MD and CEO of the bank, he also holds a position as the whole-time director. And according to the Articles of Association of Yes Bank, he is not liable to retire. But, the Banking Regulation Act is very clear when it says that if a whole-time director retires, he loses his position or is removed rather, he loses his position on the board as well. Now, do remember, it is important to note that by virtue of being the MD and CEO and by removal on that account, the legal sources we spoke to believe that he also loses his position as whole-time director and therefore as a director at all on the board of Yes Bank. Now, that is something that the board has to deliberate on. Rana Kapoor is also, it is likely he'll seek legal opinion. It's also possible this case ends up in the courts, but that is an important point that remains to be seen. One more important point I'd like to add is when it comes to the nomination of the CEO itself, both the promoters, that is now Madhu Kapoor and Rana Kapoor, have the right to send their nomination in. Will they exercise this right and will they come to an agreement on that? That is also an important point to be considered.
All right, many important points to be noted there. Thanks so much, Ritu, for getting us all those details. It will be a very closely watched board meeting decision. Cause of concern for the markets, Nifty 50 has broken below that 11,000 level once again. A large part of the softness also coming in because rupee had bounced back a little bit, strengthened a wee bit and had touched 72.5 levels, but has weakened again more towards 72.61. But some of the stocks which are really supporting Nifty 50 at this point would be Reliance Industries. Take a look at that. Has again softened from the high. And also Dr. Reddy's. That's another stock which is doing well and has just about softened, Sonia.
Oh, yes. In fact, not looking good at all, as you pointed out. You know, the Dow futures also, I mean, it is a domestic problem what we're dealing with. No two ways about that. But then it's not that the global problems have gone out of the way. Brent crude is back above $80 a barrel, and the Dow futures also now indicating that things could be headed for a weak start. So it's a double whammy of sorts that we're facing in our own markets. Talking about Brent crude, the 10th OPEC and non-OPEC meeting in Algiers wrapped up yesterday, where OPEC nations and Russia ruled out boosting crude output. Let's hear out what the Saudi oil minister and Russian energy minister had to say. Remember, they said that they were comfortable with Brent crude above $80 a barrel. So let's listen to their viewpoints.
We're going to assess the market and where we are, and as we all know, we have achieved pretty much the objectives that we set out in 2016 to achieve. Markets are relatively balanced, supply and demand are in line, inventories are where we targeted them to be, and we're looking beyond the current agreement now to 2019. We have been looking at more important aspects, which is adequacy of supply. I think member countries, for example, over the last 3 months since June, have responded in a very good way and have opened the taps and provided a lot of supply to offset decreases in Iran, decreases in Venezuela, decreases in Mexico. And markets are quite balanced today. There is plenty of supply to meet any customer that needs it.
First of all, let me say that we are acting within the framework which has been agreed on in June, and we are within that framework. So there have been no infringements, there have been no stepping out of this by Russia or by any other country. In fact, we're at 129% conformity, so we still have not reached 100. And this is something which all sides have agreed to in June. We're all jointly as a group exerting effort to be able to achieve a balanced market, which means acting both when there is deficit and when there is surplus in order to counter those trends.